835 Balancing webinar. Before we get started, I'd like to go over just a few administrative details. As you have noticed upon joining the webinar, everyone has been placed on mute for the presentation. At the end of the presentation, there will be a Q&A session. In your GoToMeeting control panel, you'll see a questions box. Please type your questions or comments into the field and hit enter. Please note that the recording of this webinar, along with the slide deck, will be posted to the WEDI website, and downloading instructions will be emailed to all registrants following the live webinar. Pam, I'm going to hand it over to you now.
Thanks, Sam. Welcome, everyone. I'm Pam Grose, one of the co-chairs of the WEDI Remittance Advice and Payment Subwork Group, and we'd like to welcome you to our webinar today. This webinar is 835 Transaction Balancing Fundamentals, Inside the Intricacies of Balancing the Healthcare Claim Payment Transaction. Just some brief information about our speakers. I mentioned myself. We also have Deb Strickland with ZO Health, who's also one of the co-chairs of the Remittance Advice and Payment Subwork Group within WEDI. And we have Pat Witek with TMG Health, who's one of the co-chairs of X12's 835 Payment Work Group. The purpose of our webinar today is to provide an overview of the fundamentals of payment financial balancing, help the users to understand the various levels of the payment financial information, help everyone to determine how overall payment financial components interact within the 835 transaction set, and help everyone to understand how the adjustment components affect the reported payment. To do that, we'll cover some basic information that's contained in the 835 transaction set. We'll look at some fundamental information around financial balancing in the 835 transaction set. We'll look at the CAQH core operating rules and how those apply to the remittance advice and the EFT transaction. We'll talk about how the 835 transaction set relates to the paper remittance. We'll look at how the 835 transaction set relates to the EFT payment, and we'll talk about where you can get more information. So to get us started, I'll turn it over to Deb Strickland. I'm sorry, to Pat Witek. Pat?
Thank you, Pam. So the 835 transaction set contains information about the payee, the payer, the amounts, and other identifying information of the payment being made as a result of adjudication by claims by the payer. You'll note that we talk about the payee. This is sometimes confusing. The payee can be the provider, and in most cases, the 835 is distributed and paid to the provider, but we allow for other entities to be able to receive that money. It may be a higher level entity. It might be the hospital as compared to an individual doctor. I know that question has come up often. One 835 transaction set, and referring to the 835, it's an ST to SC loop, reflects a single payment. A single payment is one 835 that corresponds directly to one check or an EFT. Multiple claims can be referenced within one 835 transaction set. It may be 5 claims, it may be 4,000 claims, it may be no claims actually in effect, but all of those are included in a single payment to the payee. Looking at the larger 835, multiple 835 transaction sets can be included within one logical file. A logical file is, as I sometimes refer to it, a physical file. It has an envelope, the ISA, the GS, and then it ends with a GE and IEA. And within that, there can be, I believe, an unlimited number of the ST to SC transaction sets. Next slide, please. Now, this is an extremely high-level representation of the 835. We're just going to point out the segments that are involved in balancing today. So know that there's many, many, many other segments, but we're not going to focus on those. So we start with the ST, as we mentioned in the previous slide, and that's your transaction set header. This is the beginning of what you would call a payment. In Table 1, which is the beginning set of segments, is the BPR. BPR will contain the payment. How much total payment will that payee receive and on what date? The TRN goes hand in hand with that information and contains the trace number. That could be a check number, could be an EFT, or it could be a non-payment identifier. Now within the Table 2 is the individual claims. So a CLP segment is going to represent the total of the claim payment information. Underneath each of those CLPs will be the individual service lines, SVC segments. At the end of the listing of all the claim detail will be Table 3. It may or may not include a PLB segment. This is a provider level adjustments. There may be reason to provide this information based on the claim processing. It is part of the balancing and will impact the what's ultimately reported as the total payment. And then of course we end with the SC transaction set trailer. Next slide, please. So trying to break this down in a little more detail, I'm going to point out the different elements that are critical to balancing. And as you'll see in the next part of this presentation, you'll see how these numbers are used for balancing. So in the BPR segment, the payment information, the critical piece is BPR2, and that's your total payment amount. That will be the dollar amount that has to be balanced. That's what's deposited in the payee's account or sent in a check. That's the ultimate number that we need to balance to. Again, what goes along with that as just higher level information would be your effective date, your check issue date, and that's your BPR 16. As you can see here, it's represented as 2018-03-23. The trace number is in the TRN segment, and in this example, it's just 1, 2, 3, 4, 5. And that information is used for reassociation ultimately. That goes hand in hand with this dollar amount of, our example is $17,473.88. Next slide, please. Now getting into the detail at the claim level, these numbers make up the balancing. So CLP 03, which in our example is the $8,555.80. That's the total charges that will ultimately be used to make sure that all the service lines are reported and nothing's missing or not accounted for. The total payment amount is CLP 04. In our example, it's the $7,691.80. Not part of formal balancing, but more of an informal balance is the patient responsibility field, and that's CLP 05. And that is defined as the total patient responsibility amount. It needs to balance out to the sum of anything reported with a group code of PR. In our example here, as we follow down, there was a claim level adjustment reported that is the responsibility, and that dollar amount is $864. As most of you probably know, a CAS segment can report more than one adjustment that's associated with each group code, or more adjustments for other group codes. But in the case of patient responsibility, there could be other dollar amounts, patient responsibility 1 or 3, or other claim adjustment reason codes that are reported as patient responsibility. The sum of all of those would be reported in CLP 05. Another key dollar amount in the transaction is the AMT segment. That reports the allowed amount. That is not used directly within any balancing, but it is a critical dollar amount that needs to be included. Next slide, please. The next level down is your service level information. This is the loop 2110. The claim is at the 2100. Each SVC segment must balance within itself. The key pieces of information are the SVC02, which is your total charges for that line, and the SVC03, which is your total payment amount for that line. The adjustments are reported in a CAS segment. Again, as a in this example, it's a patient responsibility. The group code is PR, the reason code is 2, and the adjustment amount is $121.48. I will note that the rules say that you never repeat an adjustment at a service line level and again at the claim level. So if the patient responsibility is here at a service line level, you will not see it at the claim level, and vice versa. The AMT segment can also be reported at the service line level. And again, this would probably be the allowed amount, as this example, B6 is the allowed amount. Next slide. And finally is the Table 3 summary information and the PLB, provider level adjustment. This segment represents any adjustments that are not reported at the claim level. There's lots of reasons for provider level adjustments: over payment recovery, other adjustments, interest, etc. These represent a dollar amount that will impact directly against the total payment for that transaction set. So in this case, there is another reason. A CV is the reason code. There's a reference identifier, and then the dollar amount is $12.12. So that represents information that is a dollar amount that is not being paid today. Negative means we're adding to the payment amount, and a positive means we're taking away from it, which is the typical standard positive negative dollar amount for all dollar amounts. Next slide. All right, at this point, I'd like to turn it over to Deb, who will talk about the individual balancing.
Great, thank you very much, Pat. So now that we have a good foundation of the segments and the structures that we're going to talk about, now we're going to talk about the balancing fundamentals. So the 835 must be balanced whenever remittance information is included in the transaction set. And as Pat alluded to, this transaction can be used to just initiate a payment. So that's why we make that statement. So if it's just doing a payment, we don't have to balance. But when there's remittance advice, all of these levels have to balance. The 3 levels of balancing are service line, claim, and transaction, and they must balance at all of these levels. The adjustment amounts in the CAS or PLB segments, as Pat mentioned, can be positive or negative. The negative amount increases the payment. So an important note, as was also mentioned, the AMT segments are not included in this nesting of balancing. So things like interest and prompt pay are tied only to the PLB. They'll be sort of summed, gathered up and summed for inclusion at the end. So like a single PLB for all the interest represented, or prompt pay, and so on. Next slide. So when we talk about balancing, we start with the service level and then sort of build up from there. Service payment information is required for all professional claims, dental claims, outpatient facility claims that are priced at the service line level, or when payment adjustments are related to specific line items. So inpatient facility claims are the only ones that can be reported at the claim level. So all the other ones need the service lines, and when you do supply service detail, you must supply it all. So it's got to have all of the service lines that are represented in that episode of care. So the adjustments reported for a service line are not taken again at the claim level. So in some cases, some language kind of sounds like we're taking it again, but we're not. We're always taking an adjustment one time, and it's either at the service level, and that nets out and represents the paid amount for that service level, or we're taking it at the claim level as a CAS at that level. So what we're talking about when we're talking about the balancing, we're talking about submitted charge for the service minus all the adjustments for the service, and that must equal the payment amount for the service. Next slide, please. So let's take a look at what this looks like when it's represented in transaction form. Lots of segments and numbers here, but as you can see, on this specific service, we've got $1,200 represented in the SVC02. That represents the billed amount for that service line. And then we have a patient responsibility of $600, and then we have a contractual write-off of $50. So the balancing for this service line is $1,200 minus $600 minus $50 equals $550. So the net paid for that line is $550. So as you can see, because these are positive numbers, we're subtracting them from the actual billed amount. Next slide, please. So now we're going to talk about claim level balancing. So this is, again, the submitted charges minus the sum of all adjustments must equal the paid amount. It's the same theory at the claim level. We're just talking about it when it's resulting in the claim. And the adjustments are totaled from both the claim and service levels. So we do consider what's been done at those service levels when we are balancing the claim. And again, very important that the same adjustment cannot appear at both the claim and service level. This happens a lot, so we wanted to really reiterate this as we went through the presentation. So when we're talking about the CLPO3, it's the sum of all CAS segments at the claim level and service levels equal the CLPO4. Okay, next slide. Patient responsibility. So we've seen this as we've been going through our examples, and we'll see more of this. This is all the adjustments reported with the patient responsibility group code of PR. And this must total to the final amount that's reported in CLPO5. This in some systems could actually initiate a letter or invoice to the patient. So this being their responsibility, either it's been collected, it will be collected at some point. So it's very important dollar amount. It's very important that it's accurate and that it is accurately reflected at that CLPO5 level. And this would be the sum of all CAS segments at the claim and service level that have that PR group code. Next slide. Let's take a look at a claim example. We've got a lot of colors going on here, but this is a good one. So we've got, again, our $1,200 is going to be submitted at the claim level. And we have a service level as well. So this $1,200 is, there's only one service level, so we're going to represent the $1,200 as the billed amount at the service level as well. Now we have a patient responsibility amount of $400 and $200, which is a net of $600. We also have an adjustment for $50, which is contractual, which ends up netting our service line paid amount to $550. So there we have a finalized service line at $550, and then we have another $55 that's going to be taken at the claim level, and that will bring us to our $495 as the full paid amount for this claim. And then, of course, we've got in CLPO5, our patient responsibility is reported there as the total $600 because we added the $400 and the $200 to get the total patient responsibility for CLPO5. Okay, next slide. So now that we've got service and claim level balancing done, now we're going to talk about the transaction level balancing fundamentals. So the sum of all those claim payments minus all the provider level adjustments must equal the total actual provider payment amount. And that's our BPR02. So again, we're talking about the positive adjustments reducing payment and the negative increasing payment. And this is important in the PLB because we have things like forward balancing. This is money that the provider maybe owes the payer that can't be recouped from this payment that we're in. That could be for overpayment recovery. It could be for any number of things. It could be a loan set to them or what have you. So these are reflected in the PLB with a forward balance adjustment, FB. And what that means is basically this amount is going to move to a future remittance. So we can't collect it here. We don't have enough. So we're going to move that to another remittance advice. Sometimes the amounts are reflected in the PLB just to acknowledge activity. When this happens, it could be for acknowledging the receipt of a paper check for an overpayment recovery or something of that nature. They don't impact the actual amount. They're just informational only. And they'll generally have a negative entry and a positive entry to offset it so that it doesn't balance, it doesn't affect the balancing, it just equals each other out. So in this case, the sum of all CLPO4s minus the sum of all the adjustments equals BPR02. And I say minus, it could be a negative or a positive in that case. Next slide. So here we have balancing with claim level only. So we don't have services here. So in this case, for the bottom CLP, we've got $15,000 minus our adjustment of $3,019.67, which is going to equal a paid amount of $11,980.33. And we go up to the next one, and we can see that we've got the $211,366.97 minus the $73,348.57, which is going to equal $138,018.40. So those two together, we're going to add those together up top. But now we have to consider additional amounts that are down in the PLB. And in this case, we've got a negative there. So that negative is actually going to be subtracted from the $3.50, and that's going to net $2.25. So we're going to subtract $2.25 to make this $149,996.50 as a net payment. So all of these numbers start coming into play, and so here we've got just the claim level, which is a bit simple. You'll see the next example as we get a little bit more complicated, but this is introducing the negative positive concept and also inclusion of the PLB in our balancing. Next slide. Now, here we have balancing with service lines and interest. So here we've got all of the different facets in play. We have PLB, we have service, we have claim, and we've got multiple claims and services. So here, the service line balancing for the lowest service line is the 1,200 minus 600 minus 50, resulting in our 550, and then of course, subtracting that $55 nets us with a $495 at that claim level. And our moving up, our next service level is the 800 minus 300 equals 500. So that's 500 that will carry up to the claim level, and then we have $50 that we need to subtract. So that makes it an easy 450 for us. So now as we get to the top of the transaction, we actually have 450 plus 495, so that's the net paid of our claims, minus the 25, which results in a net payment for the transaction in BPRO2 of $970. So here we've got all of the different facets of balancing in play. This is probably a good slide to keep handy so that you can see how all the numbers sort of interplay. We also have slid in there a couple of AMT segments representing some interest here. Now, also note, those did not come into play as we balanced this transaction. If, well, in this case, we had the 5 and the 20 actually represented as a level, PLB level adjustment for interest. So we've taken all that into account, and this is actually a nice representation so that you can have a couple reminders here of how the balancing is supposed to work, and the fact that adjustments that are at one level are not taken at the other level. So they will pertain to one level or the other. Now I'm going to turn it over to Pam for some additional important information that we'd like to share. Pam?
Thanks, Deb. Thanks. So we wanted to touch on some information that appears in the CAQH Core Operating Rules that does pertain to the 835 and can impact, while not necessarily impacting balancing per se, influences balancing and influences use of the 835 and the EFT. So again, the CAQH Core Operating Rules for ERA and EFT are mandated for use, and again, do have some impact in the use of the transaction. So Phase 3, Core Rule 370, the ERA and EFT reassociation rule, one section of that reiterates the requirement in the TR3 for a one-to-one relationship between the payment and the 835. Pat mentioned this earlier, that there is a requirement in the implementation guide for the 835 and now in the operating rule that there be a one-to-one relationship. So one check or one EFT can relate to only one 835 and vice versa. So you cannot have a payment that is then reflected in multiple 835s, and you cannot have an 835 that covers multiple payments. There's a one-to-one relationship there. This reassociation rule also requires the TRN segment from the 835, which does include the EFT trace number, to be included in the addenda record of the EFT CCD Plus transaction. So you have the same trace number in both transactions, the 835 and the EFT. So then you can reassociate those transactions because they have exactly the same trace number in both. We also have Phase 3 Core Rule 360, which is the uniform use of claim adjustment reason codes and remittance advice remark codes, that has a requirement, obviously multiple requirements in that rule, but one specific requirement that does include a requirement that any product that extracts the data for manual processing, like for example, a human readable screen or printout, it's required to also provide the description of the claim adjustment reason code or remittance advice remark code that's used as part of that adjustment to help facilitate users using the 835 transaction. We have an additional entity that provides operating rules for use in these transactions, and that's NACHA. NACHA is the organization that creates operating rules for use with the EFT transaction, any transaction that goes through the ACH network, which includes the healthcare EFT transaction. So any entity that's exchanging these EFT transactions across the ACH network is required to comply with the NACHA operating rules. One of those rules does require a bank or financial institution to deliver the information carried in the payment-related information field in the addenda record. So that is the TRN segment from the 835 if it's requested by the provider. So as the EFT information is sent to the bank, it contains that EFT trace number within the EFT transaction, and the financial institution is required to deliver that to the provider if they request it. The financial institution must have a secure electronic delivery method available to deliver that information to the provider. And the majority of banks can deliver that electronic version of the addenda record information, so that trace number information can be delivered to the provider electronically in most cases. One additional thing we wanted to touch on was the relationship of the 835 to the paper remittance advice. Many payers still continue to deliver a paper remittance advice, or maybe a PDF version on a portal, or a print image version. There is a rule, there is a requirement that the paper remittance cannot provide more information than the 835. The HIPAA rule specifically states that providers cannot be disincentivized from using the standard transaction. So you can't provide more information a different way than you do in your standard transaction. And payers cannot provide information on the paper only. So for example, takebacks or withholds cannot be delivered on paper only. They have to be included in the 835 because, again, you can't disincentivize providers from using the standard transaction. And we wanted to touch on this paper. The Remittance Advice and Payment Sub-Work Group within WEDI actually created a paper talking about that relationship between the 835 to the EFT or payment. We've mentioned a couple of times the fact that there is a one-to-one relationship between the EFT and the 835, and there are requirements stating that. So we went through and outlined a lot of that information within this paper that is available at wedi.org. The total amount of the payment transmitted in the healthcare EFT must equal the total amount of the payment that's indicated in the associated 835. So not only do the trace numbers have to match between the EFT and the 835 so they can be reassociated, but that payment amount has to match as well. So that way, the provider, when it receives both the payment and the 835, knows exactly how to match those transactions up. And all of that information is detailed in this paper. Again, that's available at wedi.org. So just to touch on some additional resources that are available, the implementation guide or TR3 document that outlines exactly what the 835 looks like is available at x12.org in the X12 store. And there is a section specifically on balancing in that implementation guide. So all of the information that we've talked about today is detailed very specifically in that implementation guide, exactly how to balance the transaction. There are multiple white papers available at WEDI.org in the Knowledge Center. And the Remittance Advice and Payment Sub-Work Group has regular meetings on the first and third Monday of every month, and would certainly encourage everyone to join those meetings to get more information. Dial-in information is available at WEDI.org. You can get more information on the CAQH core operating rules at CAQH.org, and more information on the NACHA operating rules at NACHA.org. So very good information there on the requirements that must be followed when using the ERA and the EFT. And if you have questions about that, or have some concerns about the 835 that's being received, CMS does have an enforcement and testing tool available that includes information about enforcement if there are issues that need to be reported, but it also includes a tool for testing the 835 and other HIPAA transactions to validate whether it does actually follow the rules. And just some additional information that's available that has been created by the Remittance Advice and Payment Sub-Work Group. You can see we have a whole series of documents that has been created around the ERA and the EFT and usage of those transactions. So really a wealth of resources is available at WEDI.org, and we would certainly encourage everyone to take advantage of those resources. So now we'd like to open it up for questions. Again, if you have a question, please type that information in the chat window of your GoToWebinar, and we'll be happy to answer those questions. Right now, I'm not seeing anything in the chat window. So just want to reiterate again, if you do have a question, please type that in the chat window of your GoToWebinar. I see someone with Jennifer has had your hand raised. So Jennifer, do you have a question to ask, and can you type that in your chat window? Oh, I have a different panel that's for questions, and I do have a couple of questions here. So the first question is, can a payer have more information on the portal than on the 835? So I guess I'll take that one, since that kind of was in the information that I covered, and the answer is no. You can't disincentivize a provider from using a standard transaction. So information has to be available in the 835. Full information has to be available there. And the next question is, will this presentation be available on WEDI? And yes, the recording and the presentation will be posted to the WEDI website, and information on how to download that will be emailed out to all registrants. Next question is, do you push back on payers that don't follow the guidelines? So I don't know, Deb or Pat, would you like to answer that one? I don't want to answer all the questions.
Yeah, so this is Deb. Yeah, I would definitely push back on anyone who's not providing the correct balancing on these transactions, and point out to them the materials either from here or from the implementation guide to, point them in the right direction so that they know that they're not compliant. But also on the previous slide, there was also that enforcement, location where you could go and report that if you felt that that was what you wanted to do. And I do believe that that is also an anonymous enforcement as well. So just food for thought. If they're not balancing for you, they're not balancing for everybody else. So, but it is definitely good to address that because, you know, it's a very big headache for folks who are on the receiving end to try to balance things and find the issues with a remittance that doesn't balance. Pat, do you have anything to add?
No, I would agree. Try to work directly with that payer first, and then your last resort would be to try to report them for as a compliance issue.
And just a reminder, there is the testing tool that's available at that asset website as well. So if you have a question, or if there is a question on interpretation or whatever, you can run a file through that testing tool and get some more definitive information. So any other questions that anyone would like to ask? Okay, I don't see any others coming in. So thank you all very much for attending our webinar. And again, the recording and slides will be posted out to wedi.org, and instructions on how to download that will be emailed to all registrants. So thank you very much for attending, and we hope that you'll consider attending our work group sessions as well. So thank you very much, everyone, and have a good week.